Look out below. Last time the Fed met, stocks plunged 8% from the meeting until the bottom when it eventually bottomed out. The Fed kicks off its first meeting of the year and will try to avoid that outcome you would expect. The Fed will try to negotiate a tough transition today from hiking rates in 2018 to waiting in 2019. It's also the first in the new regime where the chairman holds a press conference after every meeting, and Chairman Jay Powell could use this to kind of reset his troubled communications with markets. Joe Brusuelas at RSM writes, the Fed will attempt to thread the needle on why a pause in rates does not equal the end of its normalization policy. We do not envy Chair Powell, who is clearly not a verbal stunt pilot. Powell has stumbled several times over the past several months in describing the outlook for rate hikes and the plans by the Fed to reduce the $4 trillion balance sheet. So here's some of the things that you might expect today. Maybe just a touch less upbeat on the economy, but not so much to cause concern. Obviously, no hike, but it's going to want to maintain the flexibility to hike if things settle down in the economy, both the U.S. and globally. It'll probably remove the language saying some further gradual increases are needed, and maybe provide some balance sheet clarity. That's certainly what the market wants, but that'll probably come in the presser, not necessarily in a statement. We'll see just how far Powell goes in clarifying the balance sheet outlook. Question is whether the committee is prepared to put a number on how much it will reduce its holdings and whether it's willing to slow the pace that it's taking to get there.